Well, South African consumers have already seen high price increases in key food staple items, and local producers are also bearing the brunt of high costs. In order to remain economically viable, globally and locally competitive and socially stable, the agricultural industry needs to prepare for the short and the long term, as challenges it's currently facing may continue well into 2013. Ernst Janovsky, who's head of AgriBusiness at Absa, joins us now for more detail on this topic. Thanks so much, Ernst, for joining us this afternoon. Well, let's get straight into the state of the agricultural sector right now in South Africa and how we're standing relative to the rest of the continent at this stage.
Well, currently, if you really look at demand side, I think the demand side in South Africa is quite strong. But if you look globally, I think the demand side is basically categorized into two areas. The one is the developing side, which is growing quite substantially, whereas the developed side is actually standing still and moving sideways. So where we normally exported to Europe quite a lot of agricultural food products, we're currently struggling to get that into those markets. And also, given the changes that's going to happen in 2015, we expect that will change totally going forward. That means that new markets need to be accessed, and these are the eastern markets and Africa as a whole. And if you really look at where the demand is going to be, we're talking about 1 billion people that's going to be added in the Asian markets. We're talking about 1 billion people that's going to be added into Africa in the next 50 years. Now, if you relate that back into food, it means that in the next 50 years, we'll have to produce more food than we produced in the last 500 years. And this is the challenge that agriculture is sitting with. And this is the opportunity actually to grow, especially in Africa, where there is potential to grow.
Mm-hmm.
Ernst, I was going to actually, you sort of started to answer the question. I was going to say, we've got to produce, as you've just said, more food than we have done in the last 500 years to accommodate the needs of an extra 1 billion people. Can Africa rise to that challenge? Do we have the agricultural infrastructure to do so?
Yes, definitely. I think maybe South Africa is well developed already, and I think what we can add to this is to a large extent in terms of the technology, the productivity. That's the development side that we can do into South Africa. In the sub-Saharan Africa, that tropical convergence zone is so big currently that you can actually change this around, and the potential for that is there. In other words, we can actually grow this by 4, 5, 6 times, which is currently there. The second part that you need for agriculture is the development of an infrastructure that you can ride on the back. Now, keeping in mind that in 1886, gold was 68. Gold was found in Gauteng. The principle behind it is in 1900 we were actually shooting the infrastructure to pieces when the war was there. So in a space of basically 12 to 15 years, you can actually build that infrastructure on which agriculture can actually flourish in sub-Saharan Africa. It also means that sub-Saharan Africa will get the jobs in terms of the new gold and oil and everything else that's found there. So at the end of the day, that infrastructure will actually unlock the potential for Africa going forward.
It's one thing having the infrastructure, Ernst. What about the skill set? Do we have it?
I think the skill set is a little bit overjudged. Africa's problem is not so much the skill sets of farmers in principle. A farmer is an innovative animal by itself, so it will actually develop the skills that is needed quite fast. And especially with technology exchange currently, where we're doing everything in terms of information based right across the world, I think that skill set and what the machinery and costing and everything else is in there, today it's actually quite fast to actually start producing. Our biggest problem in Africa is to create that infrastructure so we can have the offtake, so we can actually deliver that offtake into the market. That's our biggest problem currently, and that is where we need a lot of skill sets in terms of commodity pricing, because volatility in price is the one that is the killer in terms of Africa.
Mm-hmm.
Ernst, yeah, talking about volatility, I don't want to, this is the second time I've mentioned this, so forgive me for being repetitive, but we've just had results out from a JSE listed company, a food company, consumer brands company called Tiger Brands, and in their commentary they say, as a sort of excuse for their rather muted results, they say there's been a significant increased volatility in soft commodities. That is going to continue. The general trend, I think, will continue unless production keeps up. It's a double-edged sword. On the one hand, higher prices means that Africa has the opportunity to boost its agricultural economy. But on the other hand, you know, our prices are set by the Chicago Board of Trade and other areas, and so therefore the consumer suffers. So it's a difficult thing to actually quantify.
Yes, you're absolutely right. And if you really look at it from a different perspective, prices are determined by the world pricing principle and then derived back into South Africa versus an exchange rate, which creates a lot of volatility in the whole process. So what we see during this whole process is that price volatility in terms of the long term, farmers have got no say about price volatility. Just to give you an example, maize prices stayed between $80 and $120 for more than 50 years. And they had to absorb the cost of production and everything else. So I think they're innovative in terms of managing the cost side of it. But what they can't do is they can't change the price in world terms. But what they can do is they can manage the short-term price volatility to a large extent. In other words, the seasonal price volatility. Is it going to be dry? Is it not? And a good example is where we are now currently with maize. If you look at the maize price currently, it's sitting around about 2,400 rands a ton. The potential for that maize price to up to 4,000 rands a ton in the next 3 to 4 months, because we're going into plantings. If the guys can't plant because it's dry, this price is going to hike to about 4,000 rands a ton. And that's going to have a major impact, especially on the intensive industries like the poultry industry, which will have a major impact in the pig industry, dairy industries. Those are the ones that will come in for a hiding if that happens.
With that ripple effect, standing as a possible threat, and of course the repercussions of that felt at the end of the day by the consumer, what role do you see government needing to play? I mean, we've seen some governments come to the fore within the agricultural space. Kenya specifically comes to mind for me in terms of subsidies, and managing the agricultural space and growing the agricultural space in that regard. Your view on the role subsidies have to play?
I don't think subsidies is the right way to go. I think a market is bigger than a country, is bigger than a person, is really the ultimate thing at the end of the day. A market will take out the country if need be. So my personal view is you can't subsidize because you'll never have enough money to subsidize. What you need here is good policy that creates an environment in which agriculture can flourish. And I think that stable environment, agriculture unfortunately is, you've got to be, how can I put it, have access to the natural resource, because agriculture needs that natural resource. Mm-hmm. And the uncertainty that's created in South Africa currently with labour unrest as well as land reform means that farmers are not thinking about investing in agriculture, they're actually thinking of de-investing. So the problem you sit around there is you actually need a stable policy environment that can flourish. So my personal view is create a free market, make it as effective as possible, and something like the Competition Commission currently is actually anti a free market currently, because what you see now is nobody can actually report on prices because they're so scared that they're going to step over the line in terms of the Competition Act. It means that the market becomes intransparent, so you can't see the price anymore, and because of that it becomes inefficient and easy to manipulate. So at the end of the day you need a policy environment that makes this friendly for agriculture to flourish.
Ernst, a very quick question, last 30 seconds. What is your attitude towards so-called agricultural colonialism? In other words, people, for example, from Korea coming to Africa and saying, there's a nice piece of land, we can use it better than you're using it at the moment, and we're going to produce food, send it back to our country and pay you some taxes. Is that a good or a bad thing?
At the end of the day, to me, it is about people trying to secure land. This whole battle in agriculture is going to be about the availability of land, the availability of the natural resource. And the guy that's going to control that natural resource or have access to that natural resource is the one that's going to be the winner. Because I think personally that agriculture is going to flourish to such an extent that its importance in terms of an industry is going to take off quite more than it's currently, just by the sheer demand that's been created over time. So my personal view is what you now see in terms of colonization is just securing access to land. And I think that is the whole principle behind it. So at the end of the day, it is, do I have access to land?